And good morning, everybody. Welcome to Stockradar Stocks on the Move for another week. Today's date is the 22nd of February 2025. My name is Richard Lee and I manage the stockradar.com.au website for you. Well, seeing the page at the moment, attack or defend. Sometimes we're in this dilemma where at the moment we've got a powerful market trending high, especially the overseas indices. So we've been attacking, and now we're seeing a little bit of selling appear, a little bit of a struggle. Is this the time to defend or attack? So we're in that dilemma. We're in mid-range. So we're always discussing this point of view as to where we should be. And I'll talk a little bit about that in trading tactics today as to how we're going to deal with this market. Okay, so firstly, what I want to do is go to the trend intensity rankings. Okay, your first one, we've got CHC's risen straight to the top there with a big blast up last week. Prometheus is still there. QUB is just a steady riser. Romelius is doing well in the gold sector, as is Sandfire, back on its highs. Telex is just a bundle of energy that just keeps going and going and going, as is Aristocrat. AOQ's hitting new highs. BXB's jumped again to new highs, and Coles is pushing to new highs as well. So an interesting area. Telex Pharmaceuticals, you can see there, trend intensity rating is plus 10. You can see a very, very clear trend there with very little pullbacks. And this is what happened, a bit like Aristocrat. There are a few stocks that have done this sort of thing. So it's called what we call a disciplined trade that requires lifting of the stop in response to high prices. That's all you really do. That very simple step of just keeping your stop going higher and not making any opinion as to where this stock's going to go or where it's going to finish. When your stop goes off, you'll take your profit and you'll move on. That's how we do it. So anyway, this is the top 10 trend intensity ratings at the moment. There is more top 10s at the moment because there's some pretty strong stocks out there. So there's also some weak stocks out there at the moment. So we've got to be a little bit careful about the ones we pick. But so far we've been on the right side of it. Stock pick count again down 3 this week. Down 3, quite a few out and a couple in. So we're seeing this shift again this week. So we've got 48 stock picks of 158 and 13 ETFs at the moment. Again, still pretty narrow, but those 48 stocks that are doing well are doing very, very well indeed. Okay, so now let's have a look at the overseas markets, which is always a bit of fun because they just go one way at the moment. But I'm talking about attacking and defending. So we can see at the moment with the Dow, the S&P and the Nasdaq, they're all in that mid-range area. The trend is up, so that's the force in place, but we had a bit of resistance there. And you can see here from the Dow here, we've got a bit of two-way business going on here, a bit of selling which brought the market back here. It's found a support bubble down here with the average line and the horizontal line focuses us on, and we've got the high here which we're waiting for it to bust through. As I said, the trend is up, so we're on the side of the upside, but we're always watching our support levels to make sure we're on the right side of the market. So the other two indices look pretty similar, really. Nasdaq again, it's come off from those highs again. It's quite a few times to get through R1, and it's certainly struggling. So it may come back and try and find some support. It's what markets do. Try and gather a bit more buying support to give it a good push higher. Whether it occurs or not is another thing. So if it does occur, then we're going to have a shot. If it doesn't occur, we might get a breakdown. So that's sort of what we're looking for, and that's what we're always trying to assess this buyer-seller balance at the moment. At the moment, it's come back into balance. You can see all the green bars here. We're pushing this market up a long way. Then we've got a few more red bars in here, just saying there is selling pressure occurring. So far, it hasn't really knocked the Nasdaq off its pedestal, but it could do. And S&P is the same there. We've got the highs up there. I haven't got a little line there, but we've got the highs up there. You can see here, and it's all been looking pretty good. But you can also see some selling has certainly appeared here. Okay, and that hasn't made a huge difference, so it's being absorbed pretty well at the moment. Whether that's interest rates or not, I don't really know, but it's a matter of just watching the markets and watching the price behaviour to tell us what to do. At the moment, we're in an uptrend, mid-range between support and resistance. Everything's okay for the moment, so we just hold our fire. When we go to our market again, the similar sort of thing really. High highs, high lows. We're now coming down, possibly to look into this support bubble area. A bit of a concern. Again, I'm a bit worried about our banks, whether they're going to continue to support our market. At the moment, 2 are and 2 aren't. So it's a little bit of a change in balance there. But they're fairly important to our market to continue high unless something else takes over, like the BHPs and Rios, Fortescues, whatever. Telstra's looking interesting at the moment. So we're just looking for some some support area in amongst those leaders to keep this index going. If we don't get anything else there, the banks probably will come off a bit further and put pressure on this ASX 200 at the moment. So we can see the momentum here just slowed off a little bit there. Again, we're chopping about a little bit. So just no real concern. Just watch what the support levels are. Okay, gold, well, there's no real argument there. It just keeps going higher and higher and higher on good volume. So that's a good sound trend and keeps breaking its little resistance levels. Copper, it's just hovering below those big highs up there, which we've been watching for a while there. So it's coming off again. The sellers have hit it again, so it may well come back to here again. There's no real resolution to this, apart from the fact that we have a bullish pattern there on copper, a longer term pattern to hopefully break. And hopefully BHP will be right and Mike Henry will be right, and copper is going to be the future of the world as opposed to iron ore. So we will see what happens there anyway. That'll be interesting. Brent crude. Well, again, it's come off again this week. We've seen some selling there. Again, we just keep seeing the rallies being sold into here. Despite some volume, some buying, bouts of buying that have occurred, they really haven't developed into anything. You really need to see, it's only a piece of the puzzle volume. You really need to see is a break of resistance, break of moving averages, horizontal resistances to really see that the buying is starting to get on top of those sellers. At the moment, the sellers are still well in control of the crude price. Okay, so that's really the main things. Trend intensity rating, stock big count and overseas markets. Now we might go to some of our markets. We're always about finding the right stocks, and you can see just from our stock big count there I think there's 48 in there, and there's 110 not in there. So we've immediately split up that group into the haves and the have-nots, and the ones we want to focus on are those 48. So they're the ones I focus on today. I'm going to go through a little bit about our process of how we attack and defend, trying to explain to you what we do and why we do it. Everybody has a different strategy. You have switch on, switch off, all sorts of different things, but I'm going to just outline what we do in a very simplistic way. Okay, so in the first stocks world, we saw some good stocks last week. This week I just want to show you a couple of stocks here. Boring old industrials maybe, but in these sorts of times maybe not such a bad thing. And we can see here Brambles very simply. It's kicked to a new high back here. Back here in August, and admittedly our entry is back up here. That's just the way it is. I don't finesse, I don't quibble, I just buy at market when I get a signal, because that's probably the best way to do it, rather than try and finesse. If you try and finesse, you'll get it wrong most of the time. Or you won't be happy with it. Now, so Brambles has really just jumped higher again this week. It's up over $20. We got in around $18, so we've now got a stop. It's now above our stop level. Our stop is above our profit level, so we're now in profit there. And Brambles looks pretty interesting. Had a big breakout from a long-term trading range there, and we've seen some reasonably good volume through here. It just slowed a little bit through here, but we've now getting some spikes in volume and also the momentum index, so it might be back on track again, and we may see another run there from Brambles, which is quite exciting really, because it's an interesting stock. And it's doing reasonably well at the moment, and the price is confirming that. Medibank Private, another one, bit of a boring old industrial diversified insurance stock, but it has started to make into this new high territory. I really like the way this long-term pattern has been broken out of, a big bullish upsloping triangle pattern. It's been broken out of here. It's certainly had a tough time here, really has, but it's now starting to move above that here, and again, even though the market's been weak, it seems to be attracting a bit of attention there, so it's starting to move higher above there. In fact, it's at highs this week, which is a good thing. So Medibank Private, slow but steady, seems to be doing the trick. Trend intensity rating is +9. Volume's okay, momentum's okay, so it's all looking reasonably okay for Medibank Private. As part of our process, as part of our steps, we evaluate all these trades, and it's still above our stop, so we're still holding this at the moment. QBE Insurance, another one which is spiked high. It looks a little bit like Brambles at the moment. You can see a long-term trend there for QBE. Plenty of spikes, plenty of opportunities for us to get into this one. And we've got another opportunity at the moment. It rallied above 18.50 back in 11th of November. It's now above 21.50, so there's a good few bucks in there already. It's had a nice move. The volume's been nice, especially on the break point. When we move into a trade, as we know, it's not analysis, it's more about the money management, but the break points are really key, and you'll see I often look at these break points and I show them to you, and I only take them when I get those alignment of price breaking above the average, good volume and also momentum turning positive above the zero level and expanding. So that's almost a maximum rating there for QBE. So it looks pretty good, and again, it's just a buy and it's just raise your stop. At this point, we've got a nice trend potentially developing here, so we'll just follow that until our stop goes off there. So that's a little simple process again. So that's a few stocks for you to look at. Just they're reasonably safe type stocks, a little bit of yield there and a couple of them there. So they're ones that are performing well at the moment and look fairly solid. Then we look at a couple of opportunities at the moment. One is Washington Soul Patterson, which it's just below the highs there, but it looks pretty interesting. If I just blow this up a little bit for you, you can just see we've been in this sort of stalemate area for a while above R1 here, below R1, but we're getting this stepped higher. That's a sign that the buyers are getting more aggressive. They're holding this stock well. Let me just get the volume here a little bit more clear so we can see that there. Not an enormous amount of volume, but we can see a little bit of green bars on the rallies, which is a good sign. Not a lot of selling on the downside, so it looks okay, but we do have R1 and R2 to deal with. So because this is such a fairly important area, and this one really the R2 really only has 1 point, this becomes a more significant line to me to break above. So if we do get a signal above R1, that will be a signal for me to move in on this stock because it's broken out. It's a new high breakout, and hopefully we get a bit of volume and a bit of positive momentum there to watch it. So Washington Soul Patterson is not far from its highs. R1 would be a great move. R2 would be an all-time high for Soul Patterson. So that's certainly one to watch for you. Because it is doing pretty well at the moment. The other one is Lottery Corp. I think I've probably mentioned this in previous videos, but it's just sitting there waiting for us, and it's a bit like Soul Patterson. We've got a support line here, with a rally here, higher support line. So these step ups are all very positive, but this is just standing resolute in the way at R1. So that's really the line we need to kick through. To really get us Lottery Corp moving. It's a new listing stock. It's quite exciting. It has probably got a pretty good future, but really the market hasn't got the support behind it yet to really ramp this higher. But we're waiting. It may or may not happen. It doesn't really matter. Once a break goes above R1, then our process kicks in, and we evaluate and we trade. So that's our process we go through. So at the moment we're neutral. We're looking to evaluate a trade. We're looking for a break. We're then looking to manage the trade. Then we'll be getting out of the trade with our stop loss. So that's all the steps we go through every time we trade. All pretty simple. Okay, so the Lottery Corporation trend intensity rating is -3. Okay, now a couple for you to look at that have been doing pretty well, and this is probably in the gold sector, Ramelius Resources, but we've looked at these quite a few times, and they've both shown pretty good individual strength. And we know that the pattern for Regis Resources, which is the first one I've got here, is actually fairly classical. We've had a big downtrend, we've got a big sideways movement there, big accumulation page, which is now broken out of. Now, if you've seen this before, but the breakout has occurred. Okay, and we've had a bit of a pullback here. The stop didn't go off. We've had a few weeks there, remember. So you've got to sit still. Patience is a virtue in this game. It really is. It's important you do that. And then we've seen a nice spike higher. So markets go up, they pull back. They go up, they pull back. This is what always happens. So this is looking very good for this, because this is a nice breakout of an accumulation pattern. Trend intensity rating is 10. So all signals are flashing here, especially on the break point here. The volume, momentum, and the average, all giving that very strong signal. So Regis Resources look like it wants to continue higher, all positive down here. It looks pretty good. Ramelius Resources, on the other hand, is also looking pretty good. Interestingly enough, Regis is coming from a low, and Ramelius is making highs. It's a bit like the banks, whether you CAB or Westpac or Coles or Woolworths, they all tend to be in different stages, and amazingly enough. But anyway, Ramelius Resources is looking pretty good at the moment. It's now making a new all-time high. Trend intensity rating is +10. Let me just make it a bit clearer for you. Okay, so there you can see we've got a nice big long trend up here. Now we've got a new high here. It looks like this trend is going to extend itself. Okay, trend intensity rating is 10. Volume is all solid. I can just squeeze this up a little bit for you to have a look here. See nice green bars and all these rallies. Momentum is really starting to push higher again now. So it's looking very, very good. Again, evaluating the process step by step. We've got the break. We've got the confirmation. We enter the trade and we set the stop. Bang, and that's what we do. And then we are very patient and wait for the trade to unfold. Remember, I'm a weekly trader. I'm not a daily or an hourly. It's not going to happen in the next minute. You have to be patient as to what's going to happen there. So that's a few stocks for you today, just to give you a bit of an idea about the process that I'm looking at and what I'm doing. Now I want to talk a little bit about, attacking and defending. Okay, so what should we be doing now? Do we know? Do we really know whether the market's going to go higher or down? We don't. So we've really got to not worry. Be vigilant and follow the same routine as we do all the time. Whatever the market's doing, we don't change everything. You took your signals based on a trade plan and you set your predetermined stops based on your trade plan. Have faith. Don't let the market rattle you. That's what it does. Let's go through this whole concept in my trading tactics area for you today, because it is really important that we understand what we're doing. And, everybody is different. I attack all the time, wherever the market is. The main reason is because the stock market trends higher. The longer term, it spends more time going up than down, so I always want to be aggressive. And the main reason is because when markets are sluggish, like they were for a couple of years ago, then they start to break out. Often people will not get onto them then because people are very wary of what's happened. So you need to be very blinkered, unemotional, and when signals come, you take them. This is why we've got things like PME, TLX, Aristocrat, all these stocks that broke out early and they've moved well. Some trends don't develop. We get stopped out, that's fine. But the ones that do, that's where we really make our money, and we have made some really good money on those things, some of those stocks. So, firstly, attack or defend. Attack and defense. So really, for me, attacking is if I have a trend, which I have bought, and my defense is really my stops. Okay, so that's the position that I am in most of the time. I'm always aggressive, or I am totally neutral. If my stop's going off, I am neutral. So I don't sell, I don't go short, I just look for buying opportunities. So my trades are always in that attack mode and defense mode, because I'm trading a trend, but I'm also protecting it all the time. Risk management is the most important thing. So attack is your signal and your entry, and then your defense is your stop. So your attack again is your analysis entry, signal and entry, and then your number two is your defend, is where you set a stop, and that's where your risk management trade. So that's the two parts of the trade. Really, that's all it is, and it's a very, very simple step-by-step process to manage. So I'm always in attack mode, but also in defensive mode, if you like. So not that we know what's going to happen here, and trying to make that decision is almost impossible. Okay, it really is, and to get it right all the time is even more impossible. So really, you need a strategy to be able to deal with markets as they are. Okay, so attack, which is playing your edge. So my edge is trends, is focusing on trends, and that's what I do. I qualify trends, I identify them, and I trade them. More work than not most of the time. Probably 50-50 success rate, but that's not bad because my wins are a lot bigger than my losses. Okay. So attack is playing your edge, your trend edge, okay? And you mean to balance your risk and reward, okay? But your risk is managed by stop protection, your reward is trend development, okay? So you can sort of see how I'm always at the market, because I don't really know what's going to happen. And those 2 years when the market really was going sideways was not a fun period for me. It chopped about. We were trying to be in capital preservation mode most of the time, and it's not really a money making exercise for a trend follower. But when they do trend, that's when you do make your money, and that's when you do outperform, and that's when you can see the outperformance on the homepage of my Stockradar. You can see the portfolio chart, and you can see what the 5 stocks done and the 10 stocks done over the last year or so. It's just been enormous. So we're always attacking and defending, always. So we play an edge, which is odds based. Okay, we play our edge of evaluating a trend. We always wait for a trend to have developed before we jump on it. So we wait for the trend, then we qualify it, then we decide to jump on it. And the odds are higher that the price will be higher next week than it will be this week, and that's true most of the time for a trend. Okay, so that's where you get your odds. Not all trades will be winners, so don't expect them all to be winners. You will get stopped out, move on. It's quite cleansing to do that, and it feels it doesn't feel good when you hold a stock when you know you should be out of it. that's not a good feeling because you're doing the wrong thing, and it's quite a mind weighs on your mind a lot, that sort of thing. So the clearing off of your mind, clearing off those stops, you feel good about yourself and you're ready to move again. So that's all important. So not all trades will be winners, and I don't mind taking a loss every now and then because it makes me feel good that I've done the right thing. Our approach is top down, index unaware. So I choose stocks. You look at Woolworth, Coles, Ramelius Regis, CBA, ANZ, all these different moves within these sectors go in different directions. So top-down approach really for me doesn't do anything. I'm a bottom-up. I look at the stocks themselves and I evaluate the stocks on their own basis. Okay. So our whole aim of what we try and do at Stockradar is we try to educate by example. So the trading centre is the example of all my trades. We try to educate by example to create a trading mindset. That you need to think unemotionally, think about your routine, think about your processes, how you're going to work this. You know, you sit down for the Monday morning, you do your bit of work, then off you go and do whatever else you want to do. But you don't sit and ponder over charts and say, well, this looks good. This, oh, yes, it does look good because that's what I want it to do. I want it to look good so I can buy it because I feel it's good. All those sorts of things that we think about, we've really got to chuck all that sort of stuff out. So the trading mindset is really what you need to have. So the mindset is really about developing and writing down a simple step-by-step process based on a clear objective. That's it. A couple of rules on a trade plan, entries, and the process of entries. There's a few trade plan things, you know, where you want to do sector limits and things like that. But really, the actual trade is really based on a very clear objective and a couple of steps to get you there. So you follow, test and refine that process as you build your trade plan, develop your trade plan all the time. And I'm doing that all the time, but I don't make many changes these days, or very little changes, because I don't need to, because I've been through most of that process. Once you follow, test and refine it, you activate with focus, discipline and confidence and start trading your plan, okay, step by step. Modify as needed, less is more, okay? So the more rules you have, the more exceptions you're going to have, the more complications you're going to have, a little more conflicts. If you just have a couple of simple rules, which is all you need, you'll find that your trade plan will run far smoother than if it's got all sorts of rules and exceptions and things like that. And you'll notice with mine, I don't have any of that sort of stuff. I am very black and white. It's like stop or go, yes or no. That's the way it is, okay? So modify as needed, less is more, okay? It's always a process that we need, okay? Always a process that we manage, okay? So using this process, using a process, you will gain control over your trading. Remember, the market you can't control, but you can control your trading, which is what you must do. And it will enable you to know what to buy and when to buy it. It will also enable you to know what to sell and when to sell it. How good is that? Because it makes it also easy for you. You're not doubting, worrying, or being confused. You're just making simple decisions, yes or no. So you will then become a more consistently successful trader. And there are the steps of the processes, and that's where the processes will take you to if you follow them properly, okay? And you know when you're doing that, okay? So good luck with that. You know, you can follow what I do, you can modify what I do, you can set up your own trade plan, but just have those elements of process, systems, you know, analysis, risk management, all those sorts of things in place so you know what to do. Okay, so that's really just gives you an idea of, you know, I'm attacking and defending all the time, really, with what I do. Finding the right balance between attack and defense is sometimes tricky. Some use index logic or other such filters to determine when to switch on or off a trading system, and that's fine. And that's the strategy that works. I understand that. Respecting the fact that we never really know what markets or stocks are going to do, we remain in attack mode, happy to catch the trends that may be bucking the market trend. And often they do. Often there's some good trends that develop when markets are going down. And I'll be on them because I'll have to be on them because that's what I do. So often there are stocks that do. If we have our stops in place, we can remain aggressively in attack mode. Trends come from who knows where, and big trends inevitably exceed our expectations. So when they develop, like many are now, this approach helps us gain access to the early stages of a price advance, devoid of any worry that might be associated with the early stages of a trend, because it does probably keep a lot of people out of trends when they get the signal, but it's not confident because a bit of anchor bias about what's happening, things like that. So it's really important to be clear and focused on what you're doing. So some of those early stages of those trends are Suncorp, TLX, T&E, Aristocrat, PME, JBH, plenty of them out there. Plenty of small failures as well, that's okay. But these are the ones where we make our money. So the ratio of success improves from the larger portfolio size to a smaller 5 or 10 stocks. So you will have seen my portfolios go. I run 158 stocks on Stockradar, and if I do my calculations on Stockradar, so returns are okay, but not nearly as good as a 20 stock, a 10 stock, or a 5 stock portfolio. Each of those smaller the portfolios, the better the performance. Okay, so you don't need to run a heap of stocks, and you don't need to run a heap of stocks and say, oh, well, what do I do with that stock? I don't know. I think I'll just forget about it and leave it there and watch it go down. But really what you've got to do is clean out those old stocks and keep those 5 stocks or 10 stocks really earning their money, okay, which is what we try and do. It's called high conviction. That's what we do. So the ratio of success improves from the larger portfolio size to the smaller 5 or 10 high stock portfolio, high conviction portfolio. Check out the portfolios on the homepage. This is all based on about 23 years worth of history that I've been trading for. So it's not a one-off thing. It takes into account bull markets and bear markets. But this is the focus that I have. Processes, high conviction, all this sort of stuff, which generates our profit. So that's about all I've got for you today. The market's a fantastic thing at the moment. We're getting some good stocks at the moment. There's a bit of a challenge going on at the moment. There's a bit of a change in interest rates, banks, a bit of a shift. We just watch our processes, look for the stocks that are coming in. As I said before, we were down 3 this week. We're 6 out and 3 in. So there are still stocks coming in. So it's this rotation that's occurring at the moment. So to get an idea of what's occurring and where those stocks are, if you go to our trading centre, take a trial, go to our trading centre, and you can look through the stocks and see where I'm moving, where I'm not moving. Okay, so that's probably about it for today. Nice having a chat to you. I hope the market's good to you today. Remember to watch your trends, heed your stops, keep it simple, have fun, and most of all, stay safe. Okay? Happy hunting, and I'll see you all next week.